Good afternoon to everyone. My name is Joe Terril. I'm president of Terril and Company, Independent Wealth Managers in St. Louis, Missouri. Today is March 10th, and we will give an update on what we think about the economy, the investment markets, and what we see happening over the next couple of months. And as always, helping me is Jesse Baker. And Jesse, when you're ready, let me know and we'll get right into the first topic.
Sounds good.
I wanted to take a few minutes, if I could, Jesse, and explain once again to everyone just how worldly, if you will, our markets are. I think we've seen this in the last 30 days. We've seen it in the last couple of weeks as the Dow Jones Industrial Average is making new highs, made 4 highs out of 5 days last week. And this activity driving markets higher, in my opinion, is really coming from overseas. There is no question, anybody that doesn't understand this point can deal with investments at their own peril, that this is an international market. World capital flows all over the world so simply, so easily. You must understand not only domestically how your economy is, what companies are doing, but you better understand what is coming from outside your country and what everyone else around the world feels about your country, and how anxious are they to leave capital in your country or perhaps even put more capital in your country. And we used examples all last summer and even 18 months ago about how we weren't worried about Greece and Greece's pending problems, etc., that it was not an issue that was going to affect United States markets, and it has not been. But what I believe we're seeing right now is a situation where, and I was in London for 5 days last week, and I came back after talking with portfolio managers and financial people over there, that there is a desire on their part to get a lot of European capital into the United States. It's not going to be a mass exodus, but the attitude in Europe seems to be Europe is going to be no growth. Europe is going to have 5 years worth of austerity that's going to make it a very mediocre place to invest. No one thinks we're going to have a severe depression, or no one thinks the banks are all going broke, but they just seem to feel that there's going to be no growth, and investments will be very mediocre. Interest rates are still zero. They're probably going to stay down in Europe for quite some time. The currency isn't going to do that great, either the British pound or the euro dollar. Why don't we want to move our money to the United States? Not in force, but why don't we want to reallocate more money into the United States? And this, in my opinion, is what we've been seeing for some time, and it definitely is what we've been seeing for the last 2 to 3 weeks as you begin to see inflows into our markets that are driving prices higher. So this trend is going to continue. And I'm asked frequently by newspaper reporters or other media people, well, what is fair value for our market? And I try and answer it with saying all of the historical data that we used to take into account about what makes our stocks fairly valued, overvalued, etc., it really doesn't matter anymore. The only question now is, what is the value of our investments in comparison to what's available elsewhere around the world? And we can be here saying equities are 13 to 14 times earnings. Isn't that beginning to get at the top of the historical range? Well, compared to what? Compared to the fact that people in Europe have 0 to negative interest rates, that people in Europe see no growth over there, etc. Our markets with 8% earnings yields look very attractive to them. So it's not a question of what historically in the United States has been a fair price. In today's international world, in today's movement of world capital so easily, it really becomes trying to judge what in the United States are prices and potential returns in comparison to what perhaps they are in emerging markets of China, in maybe more established markets in Europe or elsewhere around the world. When you put all that together, the United States is an attractive place to invest right now. And that's not to say that the United States does not have problems. We do have budget problems. We have any number of issues and things to worry about. It's only saying that our market probably is going to continue to make new highs because for capital around the world, it's a logical place to send it. It's the logical place to invest it is the United States. And we believe at Terril and Company, you're going to continue to see that and prices are going to move higher. How much higher? I don't know, but we think there's 10, maybe as much as 15% higher prices over the next 18 months in the United States investment markets, subject to any number of things that we can chat about on the next podcast. Just in general, we're still worried about inflation. We're still worried about Federal Reserve quantitative easing. And after attending a recent seminar, I'm now very much concerned about the start of Obamacare on January 1st of 2014. It's an unmitigated disaster and what effect that may have on our economy. So there are things to worry about, but for the moment, the markets in the United States are going to do just fine. The economy in the United States is going to grow maybe 2 to 3%, maybe a little bit more aggressive. We do things in the United States that a lot of other countries will not do. We endorse technology, we use it to its fullest extent, and we are a little bit more progressive with our energy policies than other people are. So in comparison to the rest of the world, we have relatively inexpensive energy prices, and we allow technology to be used in the United States. Those are two very attractive things that are attracting capital from outside the United States to come into the United States. So the general lesson here, so to speak, that we remind ourselves of all the time and would just try and put out there for our audience that watches these video casts, that it's a world market now. It really is subject to what everybody all over the world thinks. It's no longer a domestic market, and we need to understand that. Markets around the world should also continue to do pretty well. We have a massive amount of easing and credit creation by central banks all over the world. We're seeing a little bit of a slowdown in China from some of their spectacular 12%, 14% growth rates down to 7%. We obviously spoke earlier about Europe and the fact that they're going to go flat to maybe very slightly negative with no growth. The United States should see 2 to 3%. We happen to think at Terril and Company will be at the higher end of that range, at perhaps 3%. And the economy in general should, around the world, do okay, and we're slightly bullish on economies everywhere, and due mainly to the central bank easing and the fueling that is creating. Investment markets kind of follow a little bit that strategy. We continue to be, as we have been for some time now, mildly bullish and positive on the United States markets. By that we really mean the equity markets and even to a certain extent the commodity markets. We're extremely negative on fixed income markets. We think anything you have that would be affected by interest rates finally beginning to move up a little bit, now's the time to start working out of them. Get into floating rate paper, get into very short duration paper, and otherwise stay out of anything that is fixed income orientated. I think you'll wake up 12 months from now surprised at the principal drop in prices that you're going to see out of fixed income. But equities are the place to be, and we think you'll continue to see new highs set. It's not going to be straight up like it was last week, but ultimately every time there's a pullback, you'll see world capital come to the United States to invest. We thank you for joining us for this video cast. We will try and be a little bit more diligent about posting them about every 30 days, or if there were breaking news as necessary. Jesse, I thank you as always for your help in doing the filming and getting it posted. Once again, my name is Joe Terril. I'm president of Terril & Company in St. Louis, Missouri. We manage about $560 million worth of completely discretionary money, and we appreciate you joining in to hear our thoughts on the markets, and we'll see you in about 30 days. Thanks.